We welcome all the participants to the concluding session for today. The session is a panel discussion on cross-border SWIFT payment mechanism and its importance, the Rupee Ruble payment system, digital currency and its future. As we all can understand, the title itself is, while long enough, still does not capture all the insights which we'll be learning today from the esteemed panel. And before I hand over the session proceedings to the session chairman, I'll take the liberty to direct all of you to the detailed profiles of the chairman, session chairman, Shri Dilip Thakkar, the panelists, Shri G. Padmanabhan, Shri G. Mahalingam, and Shri Ananth Narayan, and the moderator for the session, C.S. Sunil Kothare. All the profiles are inspirational profiles. Once we have a look at them, we can acknowledge that there is so much more for all of us here to achieve. And at the same time, we could not have had a better panel than this to discuss the very important topics that we outlined today. We will be broadcasting the live feed from their respective venues to us here in Udaipur. And we are very thankful to all of them to join us in this virtual manner. At the same time, we will not be able to display the posers, and therefore we have printed them out in the paper book, which has already been handed over to all of you. So when they are referring to the posers, kindly refer to the paper book that you have with you when they are discussing during the panel. To start with, Shri Dilip Thakkar, I'll just give a brief introduction to the session chairman and the panelists. Shri Dilip Thakkar is a what we consider as the father figure as far as foreign exchange regulation study go for us in among chartered accountants. Sir has an illustrious career till now and has been in practice since decades. He also has been a past president of the Bombay Chartered Accountants Society and as well as a past chairman of the International Tax Committee. It is under his aegis and under his, under his leadership and the pioneering efforts of his that we are today benefiting from these conferences dealing with international tax and finance. We could not have had anyone better than him today to, give us valuable insights on the topic. Along with him, we have Shri G. Padmanabhan with 35 plus years of experience just alone within the RBI. Beyond that, also an immense experience in the regulatory sector as well as in the banking sector. We are very thankful to him to not only have joined in with us on the panel, but as also to also recommend to us the other panelists for today's session. And therefore, we come to Shri G. Mahalingam, again with more than 3 decades of experience only within the RBI, post that as a whole-time member with SEBI. We are having some of the most illustrious people today on our panel. Shri Ananth Narayan, again with more than almost 3 decades of experience in the banking and finance sector, with varied experience and with as a leading thinker on these topics. All these 3 eminent panelists will be taking up the posers which have been prepared with the assistance and the help of none other than our very own CS Sunil Kothare. Again, with several decades of experience in the consulting field to the, not just with the banks, but even today now connected with the consulting field, especially to the banking sector. We are very thankful to him to have agreed to moderate this very important session for us. And with this, I now hand over the session to Shri Dilip Thakkar. Sir, the floor is yours.
Thank you, Vivek. Good afternoon, my professional colleagues. We are going to have a very unusual subject for today's panel discussion on cross-border SWIFT payments. We have a very eminent faculty to discuss this topic, and of course, a very knowledgeable moderator. So my task has become very easy for me. I was only wondering that we all come across the word SWIFT in our cross-border transactions. But how many of us know what SWIFT stands for? What is the full meaning of SWIFT? Because we always use SWIFT very promptly while making an international remittance. Let me try to decipher it. It means Society for Worldwide Interbank Financial Telecommunications. Quite a mouthful. Anyway, friends, We have a very eminent panel, so I won't any further time of yours and hand it over to Sunil to start moderating the discussion. Go ahead, Sunil.
Thank you, Dilip bhai, and welcome to all the panelists as also to the participants. I'll launch into the questions straight away. And Mr. Padmanabhan, if you permit, we will start with you as the, shall I say, first speaker and to address question number 1. And just in case not everybody has the paper book before him or her, this is a question, as you are aware, on how the weaponization of the international banking system is being used. In particular, the boycott of Russia, or in the past boycott of Iran or Sudan, etc. In your view, therefore, should India, along with other countries or on its own, build a system which is independent of the presently accepted system? If so, how feasible is it to have such an alternative system of international trade payments?
Thank you very much. Thank you, Sunil. Thank you for inviting me. Once again, it's a pleasure to be amidst you and discuss some of the topical issues that everybody is getting worried about. Well, the question apparently is very simple, but the answer gets quite complicated. If you think from, first of all, let's start from the assumption that anything which is cross-border becomes problematic. It is not only problematic, it is more expensive. And why does it become problematic or expensive? Because we are immediately facing different legal systems, different technical issues. So one system talking to the other becomes relevant, and the regulatory issues. So given this context, if you look at, I think Dilip bhai explained what SWIFT was. And if you look back a bit in history and think about why SWIFT was necessary, was because the cross-border transactions, the system was quite efficient. First of all, let me start by demystifying one aspect. Several of us think that SWIFT is a payment system. It's not a payment system. SWIFT is a messaging system. Now, this common messaging system was found necessary, especially for cross-border transactions, because the earlier war codes and all which were being used to, transact and send messages, they were proving to be inefficient. Several mistakes creep in. So there was need for a standardized messaging format. And the world leaders got together, the Basel Committee came into the picture, and the SWIFT was launched. So that's the brief background of the SWIFT. Now, when we talk about SWIFT, please understand that as we speak, something like 11,000 institutions around the world are utilizing SWIFT. Now we come to the question, SWIFT, why is SWIFT being talked about? Now, for a long time, the world believed that a private organization is a pure private organization, and geopolitical issues cannot come in the way of private organizations taking their own decisions. But that has been completely proved wrong when you go back to the issues that happen, and whenever there is something where the US is involved or the Western world is involved, the infrastructure which primarily comes from these parts also get cannibalized. So if you take what happened when Iran sanctions happened, or when Russia happened, so every country probably is thinking about replicating SWIFT and saying, can we do that? Now, if you ask me, who is best positioned to do that, or even take off from a particular level and not from scratch, I would claim that it's India. Because for a long time, please remember that we were a unique country. Even today, for majority of the transactions, financial transactions, unlike the other countries, we don't depend on SWIFT. We had our own Infinite, our own structured financing messaging system, what is called the SFMS, which was developed by the IDRBT, wholly owned subsidiary of the Reserve Bank of India. And SFMS which preceded even the digital signatures. It was such a safe system which was developed at that point of time, and we were utilizing that. So is it possible to scale it up to the other countries? Yes, provide we have the technology, we implement that to talk to each other, it is possible. But it's a humongous effort. Please remember that it depends on infrastructure getting ready in all these parts of the world. 11,000 institutions we are talking about. So a more rational thought process could be that these geopolitical issues will continue to cannibalize the infrastructure. So how we can build an infrastructure which reasonably ensures that the domestic system is not cannibalized. I think India is in a very comfortable position as far as that is concerned. But where nearby the other regional blocks could be the starting point rather than a country thinking of completely replicating SWIFT, because that is going to take years and years to happen. Not that it is impossible, but I think we need to think about this in stages rather than saying that, I mean, the question could be, can we use the internet? Financial transactions always, I think the authorities will probably err on the more cautious side rather than doing transactions in an open internet. Maybe I stop here, after then we can build this on.
Thank you. Professor Ananth, you want to add to this and maybe also touch upon areas where there's a potential threat, not just to international trade transactions, but even day-to-day retail transactions. What happens if a Visa or MasterCard were to switch off their settlement platforms? Suddenly you find that you want to pay for something, some book you're importing or for some subscription, and you suddenly can't pay. So maybe you want to mix the wholesale versus the retail side of things as well.
Sure, Sunilji. I'll admit I was here more to listen to Mr. Padmanabhan and Mr. Mahalingam, and I was hoping you would call me last to offer my comments. But since you've called me, I will come in anyway. Mr. Padmanabhan has rightly talked about SWIFT and the messaging system, etc. Let me touch upon a broader issue, which also touches upon the question that you asked, which is the fact that the dollar continues to remain a very dominant currency in most of our international transactions. By the way, there are BIS reports which suggest that 88% of all foreign exchange transactions involve the dollar. So for all our hatred that US is playing big boy, etc., we all tend to still trust the dollar the most. 85% of all our imports and exports are actually denominated in dollars even today. Okay, so the dollar is a central currency in many, many ways, which means that if we are dealing with Russia, we don't deal directly between Russian ruble and Indian rupee. We tend to go via the dollar. So if you're importing from Russia, we first buy dollars, and then we use those dollars to buy Russian ruble. That's the way most transactions happen across the world. Okay. Now, why is this dollar centricity a problem? The point that you mentioned, Sunilji, about the weaponization of finance was not just limited to SWIFT. It was also the weaponization of dollar as the most ubiquitous currency across the world. What happened in the beginning of this Ukraine war, Russia-Ukraine war, was that America suddenly announced that they are going to stop the Russian central bank from accessing any of its dollar resources. By the way, Russia was prepared for that. Right from 2014 onwards, it had brought down the level of dollar assets dramatically to a very, very small number. What it did not count for is that along with America, everybody else followed suit. Europe followed suit, Japan followed suit, Australia followed suit. So much so that all the diversification that Bank of Russia had done into all these other currencies, suddenly, they were holding something like $630 billion of foreign currency reserves, including in CNY, including in Euro, including in Aussie dollar, including in Swiss franc. Most of these currencies they could not access. They could only access CNY, Chinese yuan, and they could access gold. Now, for us at a wholesale level, this is something to worry about. Today, we have about $570 billion of reserves. We hold some of it in gold. We also hold a huge amount in dollars. We hold in euros, we hold in sterling. We don't know the exact amounts, but we hold all these currencies. If hypothetically 10 years, 15 years, 20 years from now, God forbid, if what happened to Russia was to happen to us, suddenly we would find that all our buffers are no longer accessible to anybody. Is it something that we have to, is it a likelihood? Not at all. I think we are well placed in the foreign community, but nevertheless, as a central bank, you have to worry about these things. By the way, one central bank which is definitely worrying about it right now in a big way is the People's Bank of China. They hold over $3 trillion worth of reserves, and they have no other choice but currently to hold it in dollars or euros and Aussie dollar and Japanese yen. And they are suddenly wondering if they were to ever attack Taiwan and they were to face the same sanctions that Russia is going through, what will they do with the reserves? So the broad point is, I think globally, this question of dollar dominance or dollar-euro dominance is going to be challenged. Okay, what is going to emerge as an alternative, I don't know. We tend to overestimate what will happen in the short run. We tend to completely underestimate what can happen in the long run. I suspect in 20 years from now, we could see a very different financial architecture than what we see today. The dominance of dollar and euro, etc., might be under question. One quick point on this Visa and MasterCard that you mentioned. There are two elements to this, Sunilji. One is, of course, the point about if there were sanctions to be applied hypothetically on India, which very unlikely, but if it was to happen, clearly we would all have problems doing even simple transactions. There is a second angle to it. Because we go through a Visa or a MasterCard interchange, the amount of cost that we incur, sometimes even without knowing it, is enormous. You know, it almost reminds me of those old ISD, STD days in telecom. You know, in the good old days, if you had to do a call from here to New York, then you had to pay through your nose because you had to, you know, book a trunk call or book an ISD, and, you know, those things used to cost money. Today, on the days of voice over internet protocol, the actual cost for a telecom company, whether it's a local call or whether it's an ISD, is the same. There is no difference, right? So it's the same as far as foreign exchange transactions and cross-border transactions are concerned. In the past, you could say telex cost, operator cost, people cost, etc., was there, manual intervention, and therefore there was huge cost for actually converting one currency to the other. Today, everything is, you know, straight through processing. Everything is online. Nobody touches a foreign exchange transaction in a bank. And yet we charge 2%, 3%, ridiculous numbers, which make no sense at all in simple currency transactions. That has to break as well. This entire dominance, just as WhatsApp changed the face of international calls and international messaging, there has to be a moment where we do away with this nonsense of paying banks 3%, 4%. It is piracy. They don't deserve to get paid that amount, but they're charging those amounts. So a new architecture to help this is required. Good news, Sunilji, technology is available. Just as we have UPI, IMPS, NEFT, RTGS in India, which has completely brought down the cost of me transferring money to somebody in Udaipur today. Likewise, the architecture remains or is in existence right now for us to do cross-border transactions at minimal costs. So both from safety as well as a cost perspective, I suspect that the new architecture will develop, and the new architecture will be very different from what we envisage currently.
Thank you, Professor Ananth. And just a small request from my side: if you call me Sunilji, I feel older than my age. So if you call me Sunil, I'll feel younger. That is my request. So Mr. Mahalingam, I know you had kind of said that you will defer to Mr. Padmanabhan, but do you want to add anything on question number 1 before we go to the next point about alternative telecom systems?
Really not, but let me just add, because I think Ananth brought out an important point after Padmanabhan gave a beautiful introduction to the subject. Clearly, these systems are all completely Western-dominated systems. We don't realize about all this in peace times at all. Whether it is technology-based systems or market-based systems, we all tend to think that if any Western-based system is a kind of an unbiased, impartial, cannot be meddled with. These are the things that come to our mind when we associate things with West. And clearly, this war has proved things otherwise. Now, people are actually thinking whether it's better to hold my foreign exchange reserves in any currency other than dollar, actually. India itself will have to do a lot of rethink about it. So the question that you have raised is very important, that we need to have alternative systems, and it is not difficult to develop alternative systems. And this is the best time to think of alternative systems, whether it is messaging, whether it is foreign exchange, reserve holding, whether it is foreign exchange market handling, all that. In fact, in foreign exchange market, there is a set of codes which are developing. I would again say, if you look at the codes, I mean, the whole concept has evolved from what the Western countries think of foreign exchange markets. They don't really pay that much of heed to some of the underrepresented forex markets like India. So perhaps we need to really think broadly. We need to have a different block of nations which can really think through and develop technology and systems which can withstand all these issues. Like Mr. Padmanabhan rightly mentioned, when people thought of SWIFT as a private organization and it cannot be penetrated through at all, we all now sit back and realize that how easily these institutions can be manipulated by the so-called past. Thank you.
Thank you. So, which leads us to the next question. And Dilip has already talked about SWIFT being the essence being telecommunication, and which is the next question, that the alternative systems will still be based on telecom systems which are largely owned, whether you talk of the undersea cables or we talk of the satellite communication, largely non-India owned satellites. So, Mr. Padmanabhan, do you think it is time for India to look at it a little differently if we want to, as you mentioned, develop an alternative payment system? India is best placed. Currently, our telecom coverage, at least the satellite coverage, is not wide enough to cover several countries across South America or parts of Africa. What is your view on that? We don't want a telecom switch off.
No, obviously the alternatives to the telecoms are developing, and that is proving to be cheaper than anything. I mean, look at even for the so-called data, the enormous amount which was being spent by institutions on data centers, etc., is now today a concept which is almost being shelved. For a long time, people thought that you cannot have a cloud architecture for the financial system because it's too risky. But now the protocols and the controls have developed in such a way that probably the cloud gives you the same kind of safety as far as a data center, which anyway is enormously expensive to maintain. I think that's there. So whether it's a VPN network or whether it's through satellite, we should be able to control. If it is a satellite, then what is the kind of checks and balances to make sure that somebody doesn't stop a beaming from the satellite to their jurisdiction? See, yeah, if I deviate a bit and talk about one of the related issues which is developing because of all this issue is what Reserve Bank again, let's say, forefronted in terms of data localization. Today, data is money. If you think about how the whole thing is moved, please remember that trade, everything was closed, everything got opened up. In data, because of technology, everything was open. Now people are talking about data being money and data being closed down. I mean, that's becoming the kind of issue. And one of the suggestions that came to the Reserve Bank, which I am aware of that, is that why do you want only India? Why don't you say a copy in India and I will continue to do what I do overseas and I will give you access? The counter was you cannot, because any country can prevent the access of another country's systems coming into their country, whether it is through online or satellite or whatever it is. Now, the question is, if you want a system to function irrespective of politics, then we will have to find out how we can firewall that. I don't have easy answers to that, but obviously the solution is not going to be dependent upon the telephone lines or cables or anything like that. It has to be much broader than that.
Thank you. Ms. Mahalingam, you want to add on to this part?
No, I don't have really much to add to what Mr. Padmanabhan said.
Okay, thank you. Professor Ananth, on telecom, what is your view?
So, Sunil, I'll call you Sunil, so provided you call me.
Yes.
So we'll
Yeah.
go.
Ananth, okay, we'll make it reciprocal.
No, So we definitely need alternatives. I think that's very clear. One alternative which I find very exciting, Sunil, is an experiment which is being conducted between Thailand and Hong Kong, of all countries. Okay, so there is this project called the Inthanon Lion Rock project. Very broadly, I'm being very simplistic here, and I won't pretend to understand these systems very well. So very broadly, assume that you have something like a UPI in Thailand and a UPI in Hong Kong. Okay, where effectively, if I have to make transfers, as I said, to you in India, I can just do it online using a phone or using my computer, and it's a very seamless kind of a transfer. So you have these two systems, one which deals in Thai baht in Thailand, the other which deals in Hong Kong dollar in Hong Kong. To complicate matters, they are both CBDC systems, central bank digital currency systems, but ignore that for the timing. Assume it's like a UPI. What they're trying to do is to build a bridge between these two systems such that a resident sitting in Hong Kong can, almost like using a UPI, transfer Hong Kong dollars from her account into Thai baht into a beneficiary's account in Thailand. Okay, so it's like almost the interface of two UPIs on a bilateral basis between two countries. By the way, we are trying to do something similar between India and Singapore. MAS and India, we have some plans of doing this. I'm sure other countries will experiment as well. Why I find this exciting? We are using the same architecture to effect the transfers as you would have in your domestic UPI, IMPS, NEFT, whatever infrastructure that NPCI has, we use the same architecture. The other country uses their architecture, and there is a link being provided between the two. Now, imagine the beauty of this. You do away with a third currency. You do away with the requirement of a dollar interface between the two. You do away with therefore, with the SWIFT requirement, where I instruct some bank to transfer some dollars, which then goes into, from Hong Kong to Thai baht. It's amazingly, the potential, I think, is very, very large. The caution I would give is, for a country like ours, which is not entirely convertible on the capital account, there are checks and balances which are required. There is still an interface required of currency transfer or exchange from one currency to the other. We'll have to solve for that. Apparently, some solutions are emerging on that front. Some banks are providing those currency notes. But the point is, these small experiments of actually integrating the online transfers across two countries could be replicated on a much more larger bilateral fashion, could emerge as a potential alternative to SWIFT in the long run. By the way, the political aspect of all this is the Chinese government actually is pushing this very hard via Hong Kong as an experiment to see whether eCNY can effectively be used in this fashion across multiple countries so that they can do away with SWIFT. So as I said, we overestimate what happens in the next 5 years, but imagine in the next 20 years, if we actually have these network of bilateral transactions happening over one country's UPI to the other, life could be a lot more efficient and a lot more smoother without a dominance of an external Western currency.
No, Sunil, let me just add on to that because I think what Ananth explained in very simple terms, it's a major project that is being run around the world. I think we need to take cognizance of that. So one of the things that Basel committees, and several of them are working, is how to make the cross-border transactions more efficient, more transparent, less expensive, and faster, right? Now, there are two work streams which are simultaneously doing. One is this bilateral, China, Hong Kong. There is an ASEAN. There are certain things happening in Latin America, India, Singapore. All these things are happening on a bilateral basis. So basically, that's an experiment where you please remember that there is an API also involved for those who are technology minded. And all that you have to make sure that there is a handshake. The moment there is a handshake, then it becomes seamless. But that's not the exciting part. I think what is exciting is there is a separate project called, though the name can sound differently to different people, it's called the Project Nexus. This is a multilateral thing where you have a bridge with several exits, which means that rather than a bilateral, you can function on this in a multilateral manner. And in fact, enormous work is going around there. And there is an interesting paper, those who are interested in this, who will have to look at what is called a single rule book. I think they are trying to develop a single rule book where 4 or 5 things like legal access, I cannot be, admitted in every system, 20 systems. If I admit to one system, I'll be able to do, the proof of concept has been already tested in Euro, if you are Euroland. So something like that is going on. This is an enormous project. Central bank digital currency being talked about. Personally, I don't think central bank digital currency is going to be a major influencer, maybe in next 5 years. Maybe 5 years is a starting point where this is going to happen. But this bilateral arrangements, I think that's beginning to happen more and more. And ultimately, all that we're going to do is to convert that into multilateral, which becomes a lot easier because several lessons learned from this in respect of legal, access issues, regulatory issues, foreign exchange, exchange control issues, which Ananth flagged, all this become relevant. And once it is sorted out, and then we are going to see seamless cross-border transactions. Some years away, but we are getting there.
Thank you. So Dilip, I know as chairman, you will have the last word. But at this stage, would you want to add something to whatever the panelists have said? And in particular, I'm tempted as a chartered accountant to ask one question. With all this kind of exchange happening seamlessly, as our panelists have explained, do you think that the form A2 will come to an end at some stage? A1, A2, which we have been handling for years together in cross-border remittances, will that come to an end? Do you see that happening? So I think your microphone is muted.
Sunil, I think our regulators are very slow in changing their procedures. So whether A2 or A1 will collapse or not, I am not sure. But one thing is certain. We as chartered accountants used to get many inquiries when Iran was boycotted. And India was importing large amount of Iranian oil. Our refineries were processing them. And I was very closely connected with one of the private sector refineries, and we faced a lot of problems. But of course, through the UCO mechanism, we solved it. So this will also get solved. But I think it's a long-term process, because in between there was a press announcement by one of the deputy governors of Reserve Bank that bank should prepare for full convertibility of Indian rupee. And we were all overjoyed, because me and person like Rashmin Bhai were advocating scrapping FEMA altogether, though at the cost of our practice. But that doesn't seem to be happening because the reserves are going down. Today, for the first time after more than 2 weeks, it has come up a little. So I don't think that's going to happen.
Dilip, in a very lighter way, the UCO Bank solution was a Reserve Bank innovation, not the Chartered Accountants innovation.
No, sir, I didn't say that. No, please don't misunderstand. I said that we used to get problems on that account and it could be resolved because of UCO Bank intervention. Chartered accountants were only trying to find a solution, sir. It was not, I'm not even for a moment thinking on that line.
So thank you, Dilip.
That way, I must say, Sunil, that
yes,
amongst all the public sector institutions, Reserve Bank is the finest. I'm not trying to praise because these three gentlemen are there, but out of my personal experience, because it was a no-nonsense organization. It has been always. And when Mr. Padmanabhan was in that chair, we used to go to him and he used to solve our problems within seconds. So we are very proud of that institution.
Thank you, Dilip.
So no, I a very lighter way in Dilip. I think that's just to bring some humor into the conversation. Yeah, please go ahead.
Yeah. So which brings us to a point which is there in our third question. RBI has now allowed international trade in INR. Does this portend a step towards full convertibility? Mr. Mahalingam, what is your view? Or is this a kind of backdoor UCO Bank solution to the current scenario of sanctions on Russia? And unlike Iran, now we are importing oil in a big way from Russia. Mr. Mahalingam, over to you.
Thank you, Sunil. when I think about this invoicing, payment and settlement in rupees, first of all, of course, nothing is new about it, except that the settlement they have now permitted and the amount which is going to be outstanding could be invested in the Government of India securities out of the escrow account. But anyway, let me get back to this. When you say that, okay, this is going to be settled in Indian rupee, I would call it as purely a short-termist measure. I am not able to look beyond this as something which is going to portend full convertibility of the rupee or trying to make Indian rupee a reserve currency or anything like that. India is faced with a huge problem for the last about 2-3 months. Rupee was depreciating very heavily. Foreign exchange reserves are depleting. And the current account deficit was going out of bounds. It's continuing to go out of bounds. So the Reserve Bank had to think of certain measures to ensure that, okay, at least the scarce foreign exchange is not going to be, at least it could be saved for some transactions. So that's why they have come up with this measure. But at the same time, I'm not trying to rubbish this measure as something which is useless. This is something which could be built upon. Perhaps we could think of more and more to it over a period of time. But then I am left with some questions which don't have answers at all when we extend this kind of a facility. For example, let us assume that we are going to extend this facility to Russia. Russia is going to be gladly accept this facility. Sri Lanka will accept this facility. Iran will accept this facility. Russia today runs a kind of a trade surplus of close to about $3.5 billion with India, which means after they have done all these transactions in Indian rupee, in the escrow account of the Russian bank in India, there will be a $3.5 billion equivalent of Indian rupee lying. What are they going to do with that? Well, fine, they will be allowed to invest in the Government of India treasury bills, Government of India dated securities, and perhaps we can even go down the curve and then ask them to invest in the corporate bonds, AAA and all that. Great. But then it matures at some point of time, after 1 year, after 2 years, after 3 years. What do they do with that? They will try finding some projects to be invested in India. But then I am not sure whether the Russians are going to find so many projects to be invested upon in India. When they don't find that kind of a use for the rupee, ultimately they got to repatriate this money back to Russia. How are they going to repatriate? I have never been able to solve this question at all. Now, unless you have something which is a common denominator, which is universally cherished, you can't really repatriate this rupee back into Russia. So that's not going to work beyond a particular point. Now, are we trying to say that then are we trying to develop this kind of a bilateral mechanism with several countries? This bilateral mechanism, if it has to survive in the long term, India has to have a perfect trade balance with that particular country. If the balance is going to be either plus or minus, that too a big plus or a big minus, both countries will be set thinking what to do with the balances which are going to be lying in that kind of a escrow account. So beyond a particular point, it's going to be very, very difficult to contemplate. The other way is, okay, we can think ahead and say, like you asked a question to Mr. Ananth Narayan, whether this is kind of portending full convertibility of the currency. Well, if rupees full convertibility comes in, then people don't have to find much of a ways of repatriating. Repatriation becomes automatic because the rupee itself is a reserve currency. But then let's go back to Tarapur Committee report of 1997 or 2001. There are some conditions which have been put forth there, which are prerequisites for the capital account convertibility come in. I always used to think, why has Tarapur come up with such stringent conditions? Why is he actually, opening a front against India itself? But then when I think about it deeply, a country which does not have fiscal deficit under control, where the fiscal deficit can be put on a clear cap, where the country cannot really control its exchange rate, there is a stability of the currency is not guaranteed, inflation cannot be kept within a tight band, it's going to be difficult for the country to think of venturing into convertibility. Of course, people may ask the question, then how does US dollar become eligible to get convertibility? US doesn't fulfill any of these conditions. But just now we discussed, all three of us discussed, saying that US dollar is a dominant currency and nobody has challenged its dominance at all. Now time has come to challenge its dominance, then even the convertibility of US dollar will be under a question. But till those three conditions, at least these major three conditions are going to be fulfilled, Rupee cannot think of convertibility. And if Rupee cannot be thinking of full convertibility, what are we going to do with all these rupees which are going to get accumulated in this beyond a particular point of investing them in the Government of India securities, which is also going to mature beyond a particular point of time? I would in fact sum up my answer to say that I'm giving an extreme view. We are going back to the barter system. When two countries actually get into this bilateral settlement of currency, it is nothing but a barter system, a sophisticated barter system in which one currency has been accepted as a legal tender between the two countries. Otherwise, if it were not to be a barter system, we have to think of a common denominated currency. And the common denominated currency could be, if not US dollar, a synthetic currency. Now, synthetic currency is something on which a lot more work has to be done. I'll come back to it maybe when we try answering certain other questions. Thank you, Sunil, for the time being.
Thank you, sir. And before I pass on this question to your co-panelists, I will try to combine this question with the subsequent question, because there has been a lot of this focus on dollar being the currency of preference, and when it came into preference as a currency for trade, it was during the 1930s, 1914 to 1931, when it was gold backed. Then, of course, there was a Bretton Woods conference where we all know Europe did not have much choice. There was Marshall Plan following thereafter. And then the US dollar went off the gold standard entirely. And still it continues to be a preferred currency. 80%, as I think Professor Ananth was saying, of the trade is US dollar denominated. For the alternative currency or set of currencies, do you need another Bretton Woods conference? Do you need any kind of gold backing? Mr. Padmanabhan, what is your view? And then I'll come back to you, Ananth, for with this combined question, this combination question 3 and 4.
See, my views are, first of all, I mean, I would add a few comments to what Mahalingam said, but directly to start with the question that you asked. I think the world today is much different from the Bretton Woods days, 1930s and things like that. Now, to just think that through a conference or through some mechanism or countries getting together, we are going to get an alternative reserve currency, I don't think it is going to happen in a hurry. First of all, I think let's try to understand. Dilip Bhai would agree, he has been part of the exchange control right from the time that it was formed. I think invoicing in rupee was always permitted. It was not something new. Right from the beginning, there is a manner of payment regulation which said that I can receive for my export or imports, pay for my imports or receive for export from the Vostro account of the rupee account of a bank of that particular country. So there was no restriction. Nobody was using it. The simple reason, as everybody knows, is no exporter wants to invoice in a currency which is facing a secular decline. Now, there is no way that we could force somebody to do it. Now, here there are 2-3 things you will have to look at. Mahalingam clearly called out that there is a short-term measure. I completely go along and agree with that. Please understand that one of the things Reserve Bank has called out, which they have never called out in any of their earlier circulars, is they have talked about a messaging system. This particular circular talks about a messaging system which the Reserve Bank of India has never called in the past, number one. Number two, how is this different from a rupee-ruble arrangement or a UCO bank arrangement? A rupee-ruble arrangement was not even sophisticated. It was a pure barter system. And it had a lot of problems in terms of the central bank getting involved and the exchange rate getting fixed, all these kind of things. Now, UCO bank system is a unique thing. Today, the world is again moved. I don't think any country can put in place an arrangement to suit one country, and particularly a country which is facing sanction. So we had to come out with a circular which looked omnibus, but which was precisely trying to put one country wherever possible at ease. Now, the other thing that we'll have to think about is, again, why a short-term measure and why US dollar? The US dollar continues to be what it is because, irrespective of the balance of trade, which Mahalingam called out, you are able to invest the surplus that you have in markets in US which are deep. Now, unless and until we have these deep markets, this can at best be a temporary measure. I remember the Iranian UCO ban, and one of the things the Iranians wanted was to invest in real estate in India, preferably Pedder Road in Mumbai, but we can't afford it, right? So these are the issues which come about when we talk about this. And clearly, I think it is going to take a long time to take the dominance away. Although the world thinks that today probably there is nothing called a UN sanction which everybody is signed to, and US sanction becomes stricter than a UN sanction. But while all of us wish to get away from that, it's going to be very difficult. Given the dominance, Ananth pointed at 88% of the invoicing happens in the currency. It cannot go away overnight.
Thank you. So what I kind of hear from Ms. Padmanabhan, you and Ms. Mahalingam is, Mr. Mahalingam feels it's a short-term measure. Ms. Padmanabhan, you feel that there is more to it. And Mr. Padmanabhan, you were very clear that perhaps the new INR convertibility route or INR as a trade currency was essentially targeted for the Russia trade. And Mr. Mahalingam mentioned that countries like Iran or Sri Lanka could be interested. So that seems to be an incidental benefit to some other countries. But Ananth, so what is your view on this whole discussion, Rupee convertibility or the Rupee route that has opened up, and then alternative currency to the US dollar? What is your view, not just the short or medium term, but the longer duration? Because you say we understate the longer duration. So what is, in your view, the realistic scenario? Purely your view.
Sure, Sunil. On the issue of Rupee Vostro accounts and particularly geared towards Russia, I think Mr. Mahalingam covered it beautifully. I'm not going to add to that. And the additional comments given by Mr. Padmanabhan, I think absolutely cover the whole subject. I'm not going to add anything to that particular issue. Let me talk about instead this issue of replacing the dollar. Is it possible? How will it happen, etc., etc. I'm going to virtually murder Winston Churchill here. He used to have a nice quote about democracy, where he would say that liberal democracy is the worst system you can ever think of in the world, except for every other system which has been tried. Right? The dollar is somewhat similar. It is the worst currency system of the world, which makes no sense, except for every other alternative we can think of. People talk about, for instance, we should go into yuan. And sometimes I feel, have you thought through what you're saying? Do you want to hold your reserves in yuan? We have their army standing in front of us in the border. We don't, depending upon what Xi Jinping has for breakfast, they might change their policies tomorrow. You really want to leave your hard-earned money with them? You want to leave it with Europe, which is, we don't know whether it is one country or 100 countries. God knows, periodically we have questions about whether the currency will survive or not. I mean, if you look at all the alternatives that stand today, or do you want to go into gold? Russia has tons of gold and they couldn't liquidate any of it because suddenly they realized to use the gold, you have to convert it into something else first. And what do you convert it into, right? So the reality is, as things stand, we can fulminate against the US. We can call them all names. We all love cursing the US. I can't see a realistic alternative to the US emerging in the short run. Okay. Now, then the second point, which I think both Mr. Mahalingam and Mr. Padmanabhan alluded to, is maybe we can think of a synthetic currency like an SDR equivalent, some other smart way of designing a combined currency. I'm a little skeptical about this happening in the short to medium term, because between Europe and US, they account for 45% of the globe's GDP. I can't imagine why US or Europe would agree to a new architecture where they give up all this advantage they have of being the currencies of the world. This is like saying, let's bell the cat. Who is going to bell the US cat or the European cat to get them to change the architecture? It has to come through other means, right? Where I do think there is possibility, and Sunil, I don't know the answer, but as I said, we overestimate the short run, underestimate the long run. In the long run, what Mr. Padmanabhan mentioned in terms of nexus, in terms of the possibility that you could have a multilateral cum bilateral way of converting what looks like a very, very inefficient barter system to a much more efficient system, which is supported by technology and by good communication lines, 5G, etc. I think something like that could develop over a period of time, which combines in many ways CBDCs, the UPI type transfer systems which are emerging in every country, and making it a cross-border kind of a solution that could emerge, but it will probably take 20 years to do that. I think an alternative will emerge. We don't know what it will look like, but it is probably going to be based on technology and these multilateral arrangements rather than a fresh currency emerging as such. I'll stop this.
Sure. Thanks, Ananth. So what I glean from you is you don't see, and this is question number 5, you don't see a BRICS currency coming to the fore because, as you mentioned, you don't see an alternative currency coming in. Is that a correct reading of your statements, or am I going wrong somewhere?
So BRICS currency, first of all, I don't even think the BRICS see eye to eye, start with India and China. Do we really see eye to eye on multiple things for us to come up with a currency? I think it will be a rubbish currency if it comes up right now, but nothing stops us from trying stuff like this. In fact, even in SAARC, we thought about having one common currency. I don't see it happening, but yeah, sure. Why can't we think about it? But if you're talking about a currency which stands up to become an alternative to the dollar, I don't see that happening in the short to medium term. What Mr. Mahalingam said and what Mr. Padmanabhan said is absolutely right. Dollar is a rubbish currency. High current account deficit, high fiscal deficit, everything that Thakkar committee asked for, nothing of it is justified. Yet, in end of the day, a system like a currency system entirely depends upon trust. It doesn't matter what the fundamentals are. If collectively 80% of the population believe in the dollar, it doesn't matter whether a dollar is rubbish or not. It's got value. So that position a dollar enjoys, I don't see that being replaced in the short run by any other alternative currency.
Sunil, just a couple of sentences to add to
Sure,
that.
sure,
if
sir.
you think about a BRICS currency, please think about the problems that a contiguous geographical area like Europe went through because they couldn't have a common fiscal policy, right? Because of that, different countries face different set of problems. And we are talking about BRICS situated in different parts of the world, in different continents, coming together with a single currency. To my mind, it's a clear no.
Right. Thank you. Mr. Mahalingam, your view?
No, I really don't have any more points to add than what Ananth and Padmanabhan have said. Clearly, a BRICS currency is completely out of this world. I can't even imagine that. Geographically, the countries are apart. The countries don't have great commonality at all. They don't, again, politically see eye to eye, like what Ananth rightly pointed out about India and China. So first of all, I feel that number one, in the world of economics, if at all any convergence has to come, it has to come through the world of politics. Without political convergence of ideas, no economic idea can ever take shape at all. Whereas at least in the world of technology, there are scientists who are working separately. They may make the technology possible. To implement the technology, okay, that could be political difference of opinion. In the world of economics, nothing can even take shape till the political convergence is seen.
Thank you. So Dilip bhai, as chairman, your view on questions 3, 4, and 5?
Nothing particular. I only wanted to mention one thing about Thakkar committee's report on full convertibility. I have always given examples of Britain and Singapore who had scrapped FERA controls way back in 1978 and 79 and where they are now. So Thakkar committee report seems to be to say no to full convertibility ever. Somebody else has to come back with a new report to convince Reserve Bank that we are now ripe for full convertibility.
So, Dilip, thanks. But you gave rise, your comment gave rise to an interesting question in my mind. It is not in the circulated list of questions. You quoted Britain and you quoted Singapore. And today, when I look at today's economic news or the economic news of the last, let's say, 6 months, 1 year, at least to a lay person like me, they seem to be diametrically opposite. One is facing very high inflation, the other is at the cutting edge of technology and development despite the smallness, city-state kind of scenario the other one is faced with. So I'm a little bit confused. Maybe you want to park those thoughts for your closing remarks, or you want to add it now? I leave it to your judgment.
My comments are 2021 vintage. What you're talking is 2022. So we'll have a rethink on it. But this was just an example, because from 78 till 2021, if they lasted, there was an example or a benchmark. Anyway, let's proceed with the given questions.
Sure. Thank you, Dilip.
If I'm permitted to add one comment on what Thakkar Saab was mentioning about full convertibility, I just want to recall one of our former governor's statement. In a very informal conversation, he was asking, let's make rupee convertible, but what if all the bank balances in rupees get converted into dollars? What do we do? I mean, to which none of us had any answer at all. Absolutely no answer to the question. And he was asking a straightforward, downright, blunt question, actually.
Yeah,
interesting.
So, yeah.
Thank you. So we go to the next set of questions. Digital payments, and we'll start with, let's say, Ananth, we'll start with you. You already spoken about the NPCI UPI experiment on the UPI system, adopting the NPCI architecture, and then you also talked about bilateral settlement experiments. What do you think will be the impact of such an arrangement on the Indian economy? Could this kind of approach replace SWIFT in your view, assuming that it's accepted only bilaterally, or as Mr. Padmanabhan was saying, accepted under Project X experiment?
So you're referring to, Sunil, you're referring to UPI and IMPS, NEFT, RTGS?
Yes.
That's already replaced in many ways SWIFT, right? It is already based on a separate architecture, which is entirely on its own. I mean, we don't use SWIFT for IMPS or for UPI transactions. It's all based on the NPCI architecture on which it resides. So it is absolutely, so look, I think we can safely be extremely proud of what we have achieved as a country on our payments and settlements ecosystem. It's part, obviously, of the entire digital stack. The fact that we have 132 crore people who have Aadhaar cards, the fact that over 100 crore people have telephones, the fact that over 60 crore people use the internet, and now you have so many crores and billions of transactions happening on UPI. If you remember 30 years ago, Sunil, when I was doing my applications for college, I had to send demand drafts and postal orders, get them made in the post office and then have them dispatched and hope and pray it reaches them on time. Today, we don't even think about it. We just do, tap a phone and the payment is gone, right? And you get the acknowledgement and it's all free of cost. Earlier it meant several days of delays and working capital cycles getting extended. Your own money, if you're somebody who's a worker in your factory wants to send money to his village, he had to send again demand drafts and postal orders and all that money orders, which would take a cost and be a lot of time. Now it can be done absolutely instantaneously. So I think it is brilliant, and I think it is something which absolutely is great for the economy in terms of improving efficiencies. By the way, if I compare our own payment systems with that of the so-called developed world, including the US, I think the US is rubbish. They can learn a lot from us in terms of our own payments. And by the way, the gentleman out here, Mr. Padmanabhan, takes a lot of the credit for at least the payment and settlement systems, the growth that we've seen out here. So to answer your question, very simple answer, it is absolutely brilliant. Can it replace SWIFT? As I said, SWIFT is right now being used for cross-border transactions, etc. That, unfortunately, as of now, we can't replace. But if we do go into what Mr. Padmanabhan said about the Nexus type arrangements, or what I mentioned about UPI mass, MAS, of course, it's not UPI, it is actually CBDC mass kind of arrangement. then you could potentially see a SWIFT being replaced by the NPCI equivalents of two domestic countries as the interface and the exchanges.
So thank you. So, Mr. Padmanabhan, your views, because you have worked on that area and you're literally the person who developed the thought process behind it and seen it grow into reality. Your views? UPI for international payments.
Ananth has broadly covered that. I think, see, the point is that once the transactions become real time, and which is what is sought to be achieved, particularly in the cross-border, which has been picked up as the most inefficient area in the payment systems, then the use of this messaging, SWIFT already, please remember that SWIFT is also positioning themselves. Now there is a new product called I think the SWIFT GPI or something like that, which again takes care of all these issues on a real-time basis. They are no longer depending on the messaging. So the classical SWIFT messaging dependence on SWIFT is bound to decrease once more and more countries come onto this platform and then handshake and try to do transactions on a real-time basis. That is bound to happen. But the question is how soon it is going to happen. Now, Singapore, we announced is 1.5 years. And if you remember, what I heard was right, it took about almost 3.5 months for them to come to any kind of an agreement or an agreed para on how the legal system should work in these areas. Because ultimately, the compliant resolution, particularly with the retail payment system, the access criteria, all this will have to be sorted out. And here the political will is very important. In fact, during this conversation, that somebody indicated in a very lighter way, governance is important. In such matters, when countries are getting together, governance is important, but governors are more important. And unless the governors talk to each other and come to a conclusion, you will not achieve it.
Thank you. Ms. Mahalingam, any thoughts from your side?
No, I think I would just reiterate what I was mentioning. Whatever is a kind of a payment system arrangement, digital payment arrangement that we are thinking about across the countries, well, technology can definitely help us achieve whatever we want. That's not a big problem. Whatever we have done within India, which is a fantastic, phenomenal kind of an achievement, it could be extended provided the political will is there between that country and India. That's not a big problem at all. But the whole thing is again predicated upon the currency system. As long as the currency system is having the ailments that we are talking about, how do we ultimately develop this kind of a digital payments cross-border? I cannot think of that at all. I mean, you need to have some kind of an agreed upon currency through which the payments can take place. Now, technology development is not going to be the single pillar on which this entire edifice can be built. We need the edifice of an economic understanding and a political understanding.
No, Mahalingam is completely right. I think one of the critical points which is holding up this discussion is that how this foreign exchange conversion is going to work.
Correct.
Is it going to be real time? Is it going to be one day? Because please remember, I transfer money to Ananth sitting in Singapore, he gets it immediately. But the banks at the back end settle this end of the day, right? So there is a foreign exchange conversion involved. Correct. And what is going to be the basis of that conversion? That is, in fact, a point which is going in for great discussion. Because please remember, all of us know this, you are all professionals. Foreign exchange market is a wholesale market. Here we are talking about retail transactions. So how this is going to talk to each other is an important discussion that is happening in the international forum.
Let me add one dimension to what Padmanabhan said. While we are all trying to rubbish dollar, today dollar in the triangle, that's a center point. So every other currency transacts with dollar and gets converted into other currency. By that happening, every currency has a very well market determined exchange rate vis-a-vis the dollar. Let's assume the 195 countries of the world have 195 C2, that many combinations of transactions which are taking place, the market automatically thins out. There is hardly any market at all. Even the dollar-oriented market will actually thin out. So ultimately, the discovery of price as far as a currency to currency is concerned is going to become a problem. That's why I'm coming back to the same question and again, we need a common denominator currency. That common denominator currency, whether dollar can be substituted by some other currency, today we can't think of. Can we think of a synthetic currency? Yes, perhaps with a political understanding. But ultimately, all these transactions will have to go through a common denominator currency. Otherwise, the markets will not survive at all.
Okay, thank you. So you know.
So Sunil, one question, since you
yes.
have been asking questions, let me ask one question and leave it. No answers now. In the Vostro account arrangement, which we just talked about, if somebody has to start the Vostro account by an import from India, and so they will have to fund it in rupees, how will they buy rupees? Starting point. Suppose we start on Square, how will they buy rupees? Rupee is not internationalized. Rupee cannot be bought overseas. Today, the only way rupee can be bought is by exchanging a convertible currency, which everything is dollar. Anyway, go ahead, please. Sorry.
Sure. Since you adverted to the Vostro, and I think Ms. Mahalingam was also referring to Vostro accounts earlier in the discussions. This is a specific question, very embarrassing to ask anybody from the banking sector, except for those who acted as banking regulators. If there's instantaneous money transfer, do you think the existing banking architecture could create some, raise some objections, because that means the float that is enjoyed by banks is reduced? Earlier, say money, you say Nostro reconciliation will take 3 days, and the remittance would be
that has been broken,
after 3
Sunil.
days.
No, that has been broken with the Western Unions and the money grams of the world. I think the instantaneous money transfer issue with the banks putting spokes is all broken. That nexus is broken.
Okay.
Now the project nexus is a new nexus. That's not the old nexus.
Okay. So, Ms. Mahalingam, do you agree, or you have a slightly different perspective?
No, I agree with what Padmanabhan says. Actually, that kind of thing, what we are talking about, it will take 3 days for settlement and all that, that is now completely gone. Ultimately, what I feel is there has to be an institution through which the payments have to be channelized. Even if it is going to be a retail payment, ultimately somebody is going to have a wallet. That wallet is going to have an account with the bank. So there is a kind of a payment system through which that's going to be channelized. So, I mean, the Vostro account, by whatever name we call it, it will have to be there in some form or other for these transactions to take place. The same transactions which are taking place in India, that's the same currency. Even there, the dependence on banks cannot be wished away. That cannot be simply be thrown out at all. Similarly, in the international transactions, it will be there. But then, as Padmanabhan rightly mentions, all those irritants and blocks which were there present in the international transactions or even within the domestic transactions, most of those blocks have gone away. That's why the costs have come down as far as the remittances are concerned.
Thank you. So, Ananth, you want to add something on this?
So, given I'm a professor now, Sunil, I'm going to add something which is completely out of syllabus. I want to talk about Bitcoin and cryptocurrency. And I'm going to get
right.
As a former banker, I've got beaten up by both Mr. Padmanabhan and Mr. Mahalingam in their capacity as RBI people several times in the past. I'm going to probably get beaten up again. So, 2 things I want to bring up very quickly. One is this entire issue of CBDCs, central bank digital currencies. And the second is this whole issue of Bitcoin and cryptocurrencies, the private cryptocurrencies. By the way, very quick answer on CBDCs. I think it is utter rubbish for India. It is a replacement for currency notes. I have never heard of any banker or economist ever say that you should be holding currency notes. By the same token, any economist or banker who says you should be holding CBDCs, I think is not making sense. Okay, especially when you have UPI, when you have IMPS, we've talked about it a dozen times. There is absolutely no requirement for having a CBDC in India, is my personal opinion. Bitcoin and personal cryptocurrencies is a controversial topic, and I'll give you my 2 bits. By the way, I don't think we should have Bitcoin either. Clearly, it can be used and misused for all kinds of nefarious purposes, which we don't want. But I'll tell you the genesis behind why people like this concept of Bitcoin. First is the point about what you mentioned, Sunil, which is, banks starting to cry and say, oh, I'm not making float. I need to make certain charges. As I mentioned earlier, when banks charges 2%, 3% spread for making conversion from rupee to dollar, they are being usurious today. There is absolutely no cost for conversion for a bank because markets are absolutely liquid. There is no human intervention. Everything is straight through processing. It's like us paying ISD charges on old mechanisms or for voice over internet protocol, which is absolutely free. Okay, so we pay charges to intermediaries who exist because they're intermediaries. I would love a peer-to-peer transfer mechanism where I don't have any intermediary to pay in between. Why on earth should I pay a Citibank or a Standard Chartered Bank or a Deutsche Bank, people I've worked with, for doing something which is absolutely free of cost? So there is one reason for peer-to-peer transfer, platforms to come about. The second reason, which is not necessarily a great reason, is even if you go through CBDC or if you go through a formal UPI IMPS, there is an absolute track record of every single payment you pay and receive. There is some central authority which knows exactly what you're doing. Now, a lot of people say, why on earth should my individual transactions be tracked by a third party? If it is a free country, if I'm allowed to spend money the way I want to spend, why on earth should I be stopped? I know that also includes illegal activities like smuggling and stuff like that. So it is dangerous, but that's the second reason. But the underlying point of these two issues, the cost and the fact that somebody is trying to tax you and see every single transaction, are issues in the current currency architecture, which something like a cryptocurrency tries to address by way of creating this, false or whatever you call it, sense of value. I'm going to stop there.
No, let me just add a couple of things to this. I think one, I completely agree with Ananth. Given the state of retail payment systems in this country, which incidentally, even in the international forum, which is a matter of great pride for us, is referred to as the gold standard. India is referred to as the gold standard as far as the retail payment systems are concerned. So given the kind of retail payment systems we have, what additionality CBDC is going to bring in, I have my own doubts. I completely agree with Ananth on that. But it could be a different story when we think about CBDC for cross-border transactions. Because for cross-border transactions, if this is going to bring down the cost, improve efficiency, transparency, all these kind of things, then that is where CBDC is going to play a major role. But since we talked about CBDC and crypto, let me take a minute more. On June 1st, it's an interesting information, more than 1,500 technology thinkers, they wrote to the US regulators to take a hard look at the claims that crypto assets and blockchain, so far we have been swearing it by blockchain are unreservedly good. They question that. And the reason, the blockchain cannot have data privacy or transaction reversal feature, which are essential for a financial transaction. And by definition, blockchain is antithetical to that. And as a result of which, they said that even fraud, reversal, all this becomes a problem. So please consider blockchain as at best a niche technology and don't swear by it for all transactions. This is what happened in the beginning of June. I just wanted the audience to hear this out, because now people are starting to question even what was yesterday called probably the technology has arrived, the blockchain. No, people have started questioning that. I stop here.
So Mr. Mahalingam, your views on CBDC and blockchain, which has actually taken us to questions 8 and 9.
No, in fact, absolutely congruent to whatever Ananth and Padmanabhan have said. In fact, first of all, I have never understood what the CBDC animal is all about. And when I was understanding a little bit of it, I was wondering, why are we duplicating this when we have such an excellent payment system? And of course, I do agree with Padmanabhan on the cross-border payment, but the cross-border payments, I continue to maintain that it's predicated upon the exchange rate mechanism rather than these systems actually. So a technology-based CBDC is not going to achieve anything except that a digital currency, if it is going to pose a challenge to the cryptocurrency, which I don't think will ever happen, because a digital currency can never pose a challenge to the cryptocurrency. Cryptocurrency is living on its in its own world, whereas a digital currency would be a legal tender, which would be supported by certain central bank assets and all that. So both of them will live in a two different worlds apart, actually.
Right. So in his observations, Ananth made a reference to banks earning 2 or 3 or 4%. because
Please
of
note,
intermediation.
after he has left the bank, he is making this comment. Please note that.
So as somebody who has been associated with banks, and even now I'm associated with banks, do you think, and this is more for Ms. Padmanabhan and Ms. Mahalingam, that a bank treasurer who has to maintain the NOP at end of day, and who has to balance out his currency holdings within the limits that are laid down not just by the central bank, but also within his own risk parameters, is he not entitled to earn something? It's a different matter whether 2% or 3% or 4%. But is it only fair to say that the treasurer running a treasury of whatever X lakh crores in forex reserves, should he not be earning, or X thousand crores, should he not be earning something called that risk management activity that he does?
Sunil, actually, the cost of all those things that you mentioned that the banker has to do will be 5 basis points. What he charges the customer is 200 basis points.
Okay, so Mr. Padmanabhan, what is your view?
First of all, I think Reserve Bank has moved far away from fixing open position limits for banks and all. The banks do it based on their own risk appetite and all these kind of things. I mean, I for once, on a more serious note, have never believed that any service, including the financial service, must be offered free. I think somewhere in the system, there is a push for everything being free. Now, a free system never assures quality. If Google is giving you free, please remember he is making money on your data. So somewhere the money, there are no free lunches. That's what they say. So I would rather prefer a more transparent system. Today, the customers are not saying that I won't pay, but on what basis I'm paying. One of the issues that the regulators around the world, today in India, it has already happened for corporates. They will have to tell the basis on which the rate was arrived at. The base rate, what is the spread that you are asking, all these details are there. Now, very soon, this is going to become relevant for the retail transactions also, because the rate fixation is where, in foreign exchange transaction, where there is least transparency. So I would rather pitch for transparency, and which once the transparency is there, I believe the cost will be fair. The unfairness comes because of lack of transparency. Maybe I stop here.
So there seems to be agreement between Ms. Padmanabhan, you, and Ms. Mahalingam and Ananth on the possibility of CBDTs being used for international trade settlements, because that may still be feasible, but you don't see CBDC as being of value for domestic transactions. Is that a fair kind of understanding that I have got to, or have I missed something?
I agree.
Correct. Yeah, for India at least.
Yeah.
At least for India, that is a correct position.
Yeah.
Okay, thank you. So Dilip, again, as chairman, you have the last word. So you want to
I'll
shed
reserve
some
it
light
for
on your
next
thoughts?
2 minutes because we are bound to close at 4:30. So I'll reserve it then.
Right.
Go ahead with the last question.
Last question is a very simple question.
Yeah.
We'll start with Mr. Padmanabhan. Where do you see the dollar rate headed?
No. I have said I don't predict anything. Here the best of them are Ananth, Narayan and Mahalingam, because Ananth Narayan was predicting and Mahalingam was controlling. So I was not doing anything. So please ask.
Okay. So Mr. Mahalingam, ball is in your court.
See, let me tell you actually, because you are asking this question, it made me do some work actually. If you looked at Rupee from 1993-94, when the current account convertibility came, Rupee has depreciated by 3.2% per annum. Then subsequently, if you think that there has been a steep depreciation from the global financial crisis times, it has been depreciating at 5% per annum. In the recent past, it has also been depreciating at about 3% per annum. If you take, a kind of a linear trend out of it, somewhere the rupee looks around 87 to 88. But then I don't go by these predictions at all. I'm going more by an economics of it. India certainly is going to be a better behaved country in terms of inflation in times to come. West is also now experiencing a huge amount of inflation. The inflation differential between India and the West is going to narrow down. Given that the annual depreciation of almost about 3% may be a thing of the past, And we could see rupee fairly being stable, close to about 85, even in about 3 years' time.
Thank you. Ananth, your view?
So Sunil, very quickly, by the way, there is a market for 5-year, 10-year dollar rupee, which Mahalingam sir and Padmanabhan sir know extremely well. It's a liquid market. Huh? It's not a illiquid market. I didn't check the prices today. I'm guessing the following. A 5-year dollar rupee forward is probably around 95 to 98. A 10-year forward dollar rupee is probably 120, 125. Okay, I'm guessing I could be off by 2-3 rupees here and there. This was the last one I checked. This is a market available prices. Okay. Second thing, if you're asking for a view, what I would like to tell you is don't act on my view. I have been wrong several times. If you act on my view and lose money, this conversation never happened. If you act on this view and you make money, then please remember me and remember all three of us. Okay. Personally, I think the RBI and the government are focused on not letting the rupee appreciate too quickly at this point in time. I think they're using the reserves to make sure that we don't see a rapid depreciation. So over the next 1-2 months, maybe nothing much will happen. Over a period of 2 to 3 or to 5 years, I do think rupee will depreciate over time. One of the reasons for that are fundamental issue of having large current account deficits, particularly sensitive to commodity prices and other consumption items, which are funded by capital flows, is not very healthy. And to that extent, the exchange rate has to adjust. So personally, by the way, I have 2 expensive children to educate in the US. So I am long dollars. Am I 100% long? I'm not, but I am long dollars. And I will continue to remain long dollars for a while, over a period of time. As I said, if you lose money on this, I'm sorry, this conversation never happened.
It is being recorded, Ananth. But thank you. So Dilip, as chairman, again, last word to you, and the proceedings are back with you.
You see, in order to help the organizers to conclude at the 4:30 time limit, I would restrict only to say that it was an excellent panel discussion headed by a very competent Sunil and the 3-star performance of this evening. Thank you very much, all of you. That's all that I would like to say.
Thank you.
Back to you,
Thank you.
Rutvik.
Yeah. Sir, it was a very insightful session. I would request CA Kishore Pahuja ji to deliver the vote of thanks. Thank you.
What a session. I think we needed this after the lunch, of course. कोई और टॉपिक होता तो शायद थोड़ी बहुत नींद आने की संभावना लगती थी, but with this topic I think everybody was fast awake कि मेरे को तो सुनना ही है. So I'm here to thank all the expert panelists और बोले कि भगवान ने आपको ज्ञान दिया हो तो आपको भगवान को धन्यवाद देना है. I think we were listening to the gods of the topic, which is cross-border swift payment mechanism and its importance, Ruble payment system, digital currency and its future. Being need of the hour, and also this session has completed the finance portion of our International Tax and Finance Conference. As Rutvik has earlier told also, that we were always missing F in ITF. So now this has completed the F also. I'm here to offer well-deserved thanks to our all learned speakers. Thanks first of all to our esteemed chairman, respected Dilip ji Thakkar sir, for his wonderful opening remarks and further chairing the session. A big thank you to respected Shri Ji Padmanabhan sir for helping us and guiding to arrange this session. Without him, this session would not have been possible at all. Heartfelt thanks to respected Ji Mahalingam sir and also Shri Ananth Narayan sir for sharing their valuable knowledge with all of us. I also offer our gratitude to respected moderator sir Shri Sunil ji Kothare for the nice moderation of this session. We also thank all the participants of this session in this August hall and also on all the online participants. Thanks again to all the technical people who handled this online session well and made it a grand success. Thank you, everybody. Thank you very much.
Thank you.
Thank you. Thank you very much.